Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the short questions and MCQs on the topic incomplete records. Last video I have explained you the theory regarding what are incomplete records. What are the limitations of incomplete records? How to find out the profit, income, and how to find out the financial position when the accounts are incomplete. That completely I have explained in the last video. Now I am starting the short questions and also MCQs on incomplete records. But before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So without problems, you cannot be able to understand the solutions. So always keep ready the problems which I have given in the link under my description. Take a screenshot of the notes which I have written on the board so that you can keep a permanent record. It will be very helpful to revise before examination. So take a screenshot, then I'll explain each and every question. Come on. First question. I'm reading out the first problem. Newell provided the following information for the year ended 31st March 2021. Drawings for the year 3900. Net assets at 1st April 2020. That means beginning of the year is 1st April 2020 and end of the year is 31st March 2021. So net assets, the meaning of net assets is capital. Assets minus liabilities are called net assets. And assets minus liability already we know it is capital. So here directly it is not saying capital, it is saying net assets means capital. So capital at 1st April 2020 is 60,500. The net assets on 31st March 2021 is 72,275. That means we are given the capital at the beginning of the year and we are also given the capital at the end of the year. What was the profit or loss for the year ended 31st March 2021? So previous theory video I have explained you. First comparison method. We find the profit of a business which maintains incomplete records by comparing the capital at the beginning of the year and capital at the end of the year. So in our problem, we are given the capital at the beginning and also capital at the end. And we are also given the drawings. So remember the formula. Profit is equal to closing capital minus opening capital plus drawings. Closing capital minus opening capital plus drawings. You will get the profit earned during the year. That's what. So here you can see net assets means capital. The profit is equal to closing capital minus opening capital plus drawings. Closing capital is given 72,275 net assets, that is capital. And opening capital is given 60,500. Drawings are given 3,900. So 72,275 minus 60,500 plus 3,900, $15,675 is the profit. $15,675 profit. The answer is D. So here in the question, it is given A, B, C, D. It's MCQ. So A, B, C, D, 4 options are given. D option. $15,675 profit. That's all. Now, second problem I am reading out. Tariq provided the following information. 31st Jan 2020 and 31st Jan 2021. So 2020 means last year and 2021 current year. So non-current assets, current liability. Tariq's drawings for the year ended 31st Jan 2021 were 5,000. What was the profit for the year ended 31st Jan 2021? 4 options are given: A, B, C, D. Which option is correct? How much is the profit? Again, same formula. Profit is equal to closing capital minus opening capital plus drawings. So drawings are given, but opening capital, closing capital not given. And we know capital means assets minus liabilities. So here we are given non-current assets 60,000, current assets 20,000. Add up 60 plus 20, 80,000 is the asset. And liability is 15,000. So 80,000 minus 15,000, 65,000 is the capital. 65,000 is the capital at the beginning of the year. Similarly, capital at the end of the year, 70,000 plus 25,000 minus 19,000. You will get the capital at the end of the year. So here you can see answer is D. $16,000. The last D option, $16,000 is the right answer. So how we got the $16,000? Now I am explaining. Capital means assets minus liabilities. And assets means all assets, non-current assets as well as current assets, total assets. So non-current assets plus current assets minus liabilities. So beginning of the year, capital is 60,000 non-current assets, 20,000 current assets, liability 15,000. So we got 65,000 capital at the beginning of the year. Similarly, we can find out the closing capital end of the year. So non-current assets are 70,000, current assets are 25,000, liabilities are 19,000. So 76,000 is the closing capital. We got the opening capital, we got the closing capital. Now simply we substitute in the equation. Profit is equal to closing capital minus opening capital plus drawings. Drawings are given 5,000. So here profit is equal to closing capital 76,000 we got. Opening capital 65,000 we got. Drawings 5,000 given in the problem. So $16,000 is the answer. D answer. That's it. Next, third problem. Noor does not keep full accounting records. Means incomplete records. She provided the following information at the end of the financial year. Decrease in trade receivables. Then receipts from trade receivables. Discount allowed. Sales return. What were the credit sales for the year? Now see here. Here you have to remember the equation. To find out the credit sales, first you remember we take receipts from customers. To receipts from customers we add discount allowed and we add sales return. So again I repeat. Receipts from customers plus sales return plus discount allowed. From this we deduct decrease in receivables at the end of the year. Decrease in receivables at the end of the year should be deducted. So here credit sales is equal to receipts from trade receivables. That means amount received from trade receivables plus discount allowed plus sales return minus decrease in trade receivable during the year. So everything is given in the problem. Receipts from trade receivable 58,000, discount allowed 1,200, sales return 1,500, decrease in trade receivable is 2,000. Deduct 2,000. So 58,700, $58,700. This is the credit sales. Answer is C. Here in the problem you can say C answer. $58,700. So again remember, credit sales is equal to receipts from customers plus discount allowed plus sales return minus decrease in trade receivable during the year. If there is increase, we will add. If there is decrease, we subtract. Here decrease is there, that's why we are subtracting. That's it. Next one, fourth problem. A trader who does not keep full accounting records was able to supply the following information. Who does not keep full accounting records means incomplete records. He has given the following information. Amount owed by trade receivable on 1st April 2020. 1st April 2020 is the beginning of the year. Beginning of the year, amount due from trade receivable is 3,000. Checks received from trade receivable during the year, 28,000. Cash discount given to trade receivable, 1,500. Amount owed by trade receivable on 31st March 2021, closing. Closing trade receivable is 4,200. How much were the credit sales for the year ended 31st March 2021? Exactly similar to the previous problem. Credit sales we have to find out. Same equation. Same equation. Receipts from customers. It is given checks received from trade receivable. That is the receipt from customers. Checks received from trade receivable 28,000. We take 28,000. To this we add discount allowed. Here discount allowed is given as 1500. So 28,000 plus 1500. If sales return were there, we would have added the sales return. Previous problem sales return was there. But in this problem sales return were not there. If it is there, we would have added. It is not there. Ignore. So two items we have taken: receipts from trade receivables, checks received from trade receivable. To this we add discount allowed. Then decrease in trade receivable is deducted. Now we have to check whether increase or decrease. Beginning of the year trade receivable were 3,000. 3,000 were the trade receivable at the beginning of the year. End of the year trade receivable are 4,200. So beginning of the year 3,000. End of the year 4,200. So there is increase. Increase in trade receivable. So increase in trade receivable should be added. Previous problem decrease was there. So we have deducted. Now we have increase. So increase in trade receivable should be added. So 28,000 is the receipts from trade receivable. 1,500 is the discount allowed. And increase in trade receivable is 1,200. How we got 1,200? 4,200 minus 3,000. End of the year 4,200. Beginning of the year 3,000. So 4,200 minus 3,000 is equal to 1,200. 1,200 increase. Now take the total. You will get 30,700. The D answer. Fourth problem. D answer $30,700. We got. Fourth problem completed. Now see the fifth one. Problem number 5. A trader provided the following information. Here, little bit difficult problem. Carefully you try to understand. A trader provided the following information. Revenue. Revenue means sales. Sales revenue are 1,20,000. Inventory at the start of the year 9,600. Inventory at the end of the year 10,200. Inventory means stock. Opening stock and closing stock. Opening inventory, closing inventory given. A markup of 25% is allowed. What were the purchases for the year? We have to find out the purchases. Entirely different problem. A markup of 25% is applied. First of all, you must know the meaning of the term markup. Markup means the rate of gross profit on cost. The rate of gross profit on cost of goods sold. That is called markup. So here I have explained you like this. Answer you will get D, 96,600. How you will get? Markup means the rate of gross profit, the rate of profit on cost of goods sold. This definition you have to remember. Whenever the word markup is given, you must think that it is a percentage of profit on cost of goods sold. In our problem, cost of goods sold is not given. So we have to suppose. Let the cost of goods sold be 100. Here markup is 25%. It means that profit is 25% of cost of goods sold. When we say markup 25%, it means the profit is 25% of cost of goods sold. We don't have cost of goods sold, so I am supposing. Let the cost of goods sold be 100. Suppose $100 is the cost of goods sold. Now markup is 25%. So 25% of 100 is 25. So we got profit will be 25. So when we suppose cost of goods sold 100 and profit 25, so sales revenue will be 125. Because sales is equal to cost of goods sold plus profit. Write it down there itself. Always maintain a notebook when you listen the lecture. When you watch the lecture, always maintain a notebook. Whenever I say something new, you should write it down. Then only you can be able to remember for a long period of time. Otherwise, you'll forget it. So sales is equal to cost of goods sold plus profit. So here we have supposed cost of goods sold as 100, profit 25. So sales will be 125. We got the equation on our supposition. We supposed COGS 100, Profit 25, cost of sales revenue will be 125, right? But our sales given in the problem revenue is given 1,20,000. Sales revenue is given 1,20,000. So here when revenue is 1,20,000, how much would be the cost? When the revenue is 125, the cost is 100. When revenue is 125, cost is 100. When revenue is 1,20,000, how much would be the cost? So 1,20,000 divided by 125 into 100. 1,20,000 divided by 125 into 100, you will get 96,000. What is this 96,000? Cost of goods sold. Ultimately, what we have to find out, it is asking you to calculate the purchases. It's asking you to calculate purchase. So I have calculated cost of goods sold. Now one more equation you have to remember. Cost of goods sold, COGS, cost of goods sold. The formula is opening inventory plus purchases minus closing inventory. This formula you have to remember. Cost of goods sold is equal to opening inventory plus purchases minus closing inventory. In this equation, one unknown variable is the purchases. Remaining everything we have. Cost of goods sold, just now we have calculated 96,000. So in place of cost of goods sold, I am writing 96,000. Opening inventory is given in the problem. In the problem given, inventory at the beginning of the year 9,600. So opening inventory 9,600. Purchases we don't have. We have to calculate purchases. So I am writing purchases. Minus closing inventory is given in the problem 10,200. 10,200. So we got the equation 96,000 is equal to 9,600 plus purchases minus 10,200. Now, purchases we keep it on right hand side. Bring this 9,600 to LHS minus 10,200 to LHS. Right? So this plus 9,600 will become minus 9,600. This minus 10,200 will become plus 10,200 because I am changing the sign. I am bringing that from RHS to LHS. So plus will become minus, minus will become plus. So is equal to purchase. So 96,000 minus 9,600 plus 10,200 is equal to purchases. Purchase is equal to $96,600. That is the answer. Answer is D, $96,600. Fifth problem completed. Now sixth problem. A trader provided the following information. Net assets at the start of the year. Net assets means capital. Just now I told you. So capital at the beginning of the year 8,000. Drawings in cash 2,100. Drawings in goods. That means when the owner withdraws the cash, it is called drawings. When the owner withdraws goods from the business, that is also drawings. Right? So cash drawings and goods drawings. The goods drawings are cost 50, selling price 90. When the owner withdraws the goods from the business, we record at cost, not at the selling price. Selling price will apply when we sell the goods to a customer, and it includes price, it includes profit. Selling price includes profit. So business will earn the profit from customers, not from the owner. So when the owner has withdrawn the goods, take at cost, not at the selling price. Here don't consider selling price 90, take the cost 50. Then net assets at the end of the year. Net assets means capital. Capital at the end of the year 8,200. What was his profit for the year? Again we have to calculate profit. Same formula. Profit is equal to closing capital minus opening capital plus drawings. Closing capital minus opening capital plus drawings. Everything is given. The answer is C, 2350. Answer is C. So how we got? Profit is equal to closing capital plus drawings minus opening capital. Closing capital is given 8,200. Drawings are given. Cash drawings 2,100. And goods drawings are 50. Goods drawings are 50. And opening capital is 8,000. So profit comes to 2,350. C answer. Next comes seventh problem. A business provided the following information. Sales are 3,000. Opening inventory 400. Closing inventory 700. Markup is 50%. What were the purchases for the year? It's exactly similar to the previous problem. Just now I told you markup. Markup means the rate of profit on cost of goods sold. Here I am explaining. Same thing. Now, answer will be D, $2,300. The last D option is correct. So how we got 2,300 I am explaining. Here markup is 50%. I told you markup means rate of profit on cost of goods sold. It means gross profit is 50% of cost of goods sold, COGS. We don't have cost, so we suppose 100. Let the cost of goods sold be 100. Profit is 50%. So 50% of 100 is 50 rupees. 50% of 100 is 50. So when COGS is 100, gross profit is 50. Sales revenue will be 150 because sales revenue means cost of goods sold plus profit. Cost plus profit is equal to sales. So here cost is 100, profit 50, sales are 150. We got the equation. What is the revenue given in the problem? Sales given in the problem 3000. Actual sales given in the problem 3000. So when sales revenue is 3000, how much would be the cost? So 3000 divided by 150 into 100, you will get 2000. So this 2000 is the cost of goods sold, COGS. Now you must remember the formula. Cost of goods sold is equal to opening inventory plus purchases minus closing inventory. That is the equation of cost of goods sold. Now cost of goods sold, COGS, we got 2000. Opening inventory is given in the problem. Opening inventory 400. And purchases we have to find out. And closing inventory is given in the problem 700. So 2000 is equal to 400 plus purchases minus 700. Bring this 400 and 700 to LHS. From RHS, bring it to LHS. So the sign will change. Plus will become minus, minus will become plus. So this 400 will become minus 400. This minus 700 will become plus 700. So is equal to purchase. So purchase is equal to 2370. That is the answer. D. Now eighth one. Eighth one is Barak did not maintain a full set of accounting records, and in his first year of trading, the sole trader Barak just he have started his business, new business. So at the end of first year, how did Barak calculate his credit sales? Now he want to find out the credit sales. So different options are given A, B, C, D. Now B option is correct. What is the B option? Closing trade receivable plus cash received plus discount allowed. I already told here. I already told this credit sales. How to find out credit sales? So credit sales is equal to closing trade receivable plus cash received plus discount allowed. The B answer, you make it right. Credit sales, closing trade receivable plus cash received from customers plus discount allowed. That's it. Eighth problem completed. Ninth one. A trader does not keep proper accounting records, incomplete records. Her capital at the end of the financial year is higher than at the start. Closing capital was more than the opening capital. What it said? She has not introduced any further capital during the year. What does this show? She has not introduced any more capital during the year. See here, when we compare opening capital with closing capital, if closing capital is more than opening capital, two reasons are there. The first reason is the owner might have introduced further capital. Second reason is profit is generated, due to which the capital at the end of the year will be more. Here specifically given, the owner has not introduced the capital. The owner has not introduced the capital. That means then why the capital has increased? On account of profit. On account of profit. So due to profit earned during the year, the closing capital will be more than the opening capital. Right? So here 4 options are given, A, B, C, D. Last option D is correct. Profit for the year is greater than the annual drawings. The profit are more than drawings. That is the reason why the closing capital is more than the opening capital. So D answer is right for 9th problem. Now come to 10th one. The following figures are extracted from the X statement of financial position. So some information is given. Non-current assets 60,000, current assets 20,000, current liability 15,000. Profit for the year 12,000. What is the opening capital? When assets and liabilities are given, we can find out the capital. Closing capital we can find out. Non-current assets 60,000, current assets 20,000. So 60 plus 20, 80,000 assets. Minus liability, liabilities are 15,000. So 80,000 minus 15,000, 65,000 rupees is the closing capital. Closing capital. Drawings, profit is given 12,000. Drawings are not given. No drawings at all. The profit is given 12,000. What is the opening capital? See here, we already know in the first problem we have written the equation. Profit is equal to closing capital minus opening capital plus drawings. If there are no drawings, don't add drawings. So simply profit is equal to closing capital minus opening capital. Profit is closing capital minus opening capital. So here in this problem, opening capital we have to find out. Opening capital we have to find out. Profit is given in the problem. And closing capital also given because assets minus liabilities. So you can see here, closing capital is equal to non-current assets plus current assets minus liabilities. So closing capital 60,000 plus 20 minus 15, 65,000 is the closing capital. Opening capital we have to find out. Profit is 12,000. So profit is equal to closing capital minus opening capital. Profit is given in the problem 12,000. In place of profit 12,000. Closing capital just now we have calculated 65,000 minus opening capital. Bring opening capital to LHS, left hand side. So this minus opening capital will become plus opening capital if we bring it to LHS. And take this 12,000 to RHS. 12,000 is on LHS. Take it to RHS. So it will become minus 12,000. So 65 minus 12, $53,000. That is the opening capital. The answer here is B. B is the answer, $53,000. That's it. Next one, 11th problem. A trader does not keep complete accounting records, again incomplete records, but provides the following information at the end of a year of trade, first year of trading. Checks received from customer 628, cash received from customer 149. Then amount owed by customer at the end of the year. That means amount due from customers, trade receivable at the end of the year. That is 73. Discount allowed is 25. What is the revenue for the year? Revenue means sales. Revenue means sales. Sales we have to find out. Previous problem I have explained you the equation for finding out sales. Here you can see credit sales. Here also we have seen sales. The equation is cash receipt from the customers. Here in this problem, checks are received and cash are also received. Doesn't matter. Whatever we receive, whether we receive in cash or whether we receive through check, it is the receipt from customers. So we add up. Check received from customer 628, add cash received from customer 149. Both are receipts. Then amount owed by customer at the end of the year. Closing trade receivable. That also added. That also added. Then discount allowed. That will also be added. So simply you have to add up all. Cash received from customers, check received from customers, closing trade receivable and discount allowed. If you add up all, you will get the revenue. The answer is $875. $875 is the answer. Now, here I have written here, revenue is equal to how much? This is what we have to calculate. Revenue means sales. Check received from customers plus cash received from customers plus amount due from customer at the end plus discount allowed. Add up 628 plus 149 plus 73 plus 25. $875 is the sales revenue. That's all. So, totally 11 problems